All right, so Brendan, if you don't mind, I want to hit on some of the disconnect. And we saw Goldman Sachs raise its GDP forecast for China for the year on the back of this stimulus announcement from the Ministry of Finance. We're seeing mixed results when it comes to equities. I mean, how are you interpreting this, and also the lack of actual details about what that stimulus will be?
Yeah, Frank, to Eunice's point, the one thing really lacking from the Ministry of Finance press conference was exact stimulus for domestic consumption, something that we think is going to happen. They potentially teased at it. They did speak to issuing more special government bonds, that about 2 trillion RMB, a little bit higher than expectations, but they didn't really specify what that would be used for. Very strong support for the housing sector, for injecting capital into the bank. So I think this is a super tanker that's slowly shifting, Frank. We're seeing clearly an indication from the Chinese government, an acknowledgement that the economy is not doing great. But to move that super tanker does take some time. So I think it's very strong incentive, a strong issuance, almost profit warning to investors that something is changing as we speak.
So you're essentially, it's a step in the right direction, but we need more details. So let's get into it. Economists have estimated that the stimulus needs to be somewhere in the range of 2 trillion yuan to 10 trillion yuan. In your mind, is there a number in there that you think would excite the equity markets, that would meet the needs of what's going on in China? As you mentioned, deflationary pressure, so to Eunice, also a lot of weakness in the property sector, and it's a lack of consumer confidence.
We know that they've cut interest rates broadly in terms of deposit ratio, loan prime rate. So they're going to put through this huge refinancing of mortgages. So there are some beneficiaries that just take time to make their way into the economy. I think a lot of investors have been very focused on the domestic consumption. So we would expect at least 1.5% to 3% of GDP in terms of a budget deficit geared to domestic consumption. But certainly a big effort to get housing prices up to at least be stabilized, just because of 2/3 of urban household wealth invested in real estate. So if we can just get the real estate sector up, it should help on domestic consumption.
Well, but Brent, I want to go back to this. You're saying there was a lack of details, but in your mind, is there a number when it comes to stimulus that would make sense, that would excite everybody? I know you're saying, we're hitting on the issues a couple of times here. It's weakness in the property sector, it's weakness in consumer spending, it's deflation concerns. But what's the fix?
I mean, the fix ultimately is you got to jar this economy out of a potential Japanese deflationary spiral. And I think that is acknowledged at the highest level of the Chinese government. And you're just seeing this policy being implemented. I mean, there is some kind of procedural that at the end of the month would be the NPC, where big government meeting, very top level of the Chinese government, and that would actually approve the actual potential stimulus measures. So there's a little bit of government procedure that has to take place that could happen as soon as this end of this month.
All right, so Brendan, bottom line it for me. Is there anything different? Is there anything different about China for investors right now than there was a month ago, a couple weeks ago, before these kind of stimulus announcements started?
Yeah, I mean, 100%, Fred, you're seeing an acknowledgement at the highest level of the Chinese government that the economy is not doing well, and they're just starting to implement the policies to reinvigorate the economy. So China should be on the radar of every investor. Obviously, a lot of investors, you have some implicit exposure through U.S. and global multinationals like the Apples and Starbucks that should be beneficiaries of a rise in domestic consumption.